I'm Dan Fitzpatrick at realmoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today we're going to look at Beam, MarkWest, and Alcoa. Now first let's check out Beam. Kramer featured this company last night on Mad Money. The thing I like about this is, look, it's a booze company, all right? That's like what they do. They spun off from Fortune Brands. Home furnishings and fixtures. I got to tell you, I wouldn't say booze is exactly like a fixture in my home. Certainly isn't really a furnishing either. I like to drink it, but not so much that I'd like make it a permanent fixture in my home. Anywho, here's the deal. Look at the weekly chart. This is like one busted stock. What Kramer's talking about is this may be an acquisition candidate or an acquisition candidate. Diageo, Kramer says, it'd be perfect to be buying this company. If you are buying it for that reason, I don't even think Kramer would encourage that. He says, you know, you don't buy companies just because you think they might be bought. It's just not a really good reason. However, here's the deal. We just look at this weekly chart here. The low is 42.30. That's really your downside here. Now, that's $4. That's over $4. $4.40 last time I did the math. That means that you've got a significant downside risk if you're buying here, because you've got to look at any pullback as something that you're not going to know whether the stock is going to continue its downtrend or hang in there until it comes back to test this level and hopefully moves up. So that's a lot of risk. So how do you trade this thing? We'll go back to the daily chart. Just simply do this. Take a little bit of stock right now if you like Kramer's take on the company. Take a little bit of stock. Get involved. I think the stock's going to trade sideways for a while. Probably pop today because that's what stocks do when Kramer talks about them. You all buy them, don't you? So let the stock trade sideways before you build a significant position. Then go ahead and take it if it starts firming up here. Now, Kramer likes these master limited partnerships. Why? Well, because MarkWest is a good example. They yield 6.1%. That's not a bad yield here on this oil and gas stock. But look here. The stock is effective. I know this looks like it's in a really nice uptrend, and it is if you bought back here in 2009. But look at the trend here. Stock's trading upwards, and then since this peak here, it's really been trading sideways. Now, that's not a bad thing. It's not a bad deal. If you buy a stock, you get a little bit of upside, and you get paid 6.1% just for the trouble of holding the stock. But just keep in mind, this is your 40-week or 200-day moving average. 50-day moving average is starting to drift down through the 200-day moving average. This is not a good pattern. So what are you going to do? I think you back off on this thing. Let it come in a little bit more. The lower you buy it, the higher the yield, the more potential there is for capital appreciation. Somewhere around 44, maybe even 43 seems right to me. Alcoa. Now, I was just talking about this last night on Option Market Mentor, and noting the same thing that Kramer kind of talked about, which is, look, these guys announce earnings today, right? Well, look at how the stock's been discounted. I mean, this thing peaked up here, 2011. Since that time, it's just gotten absolutely taken out to the woodshed. Yeah, it looks like maybe a short-term bottom there. Now the stock is up really at resistance. So what's the deal? I go back to this. The stock has taken a significant discount, particularly so just over the last couple months. So I'm almost thinking, look, it hardly doesn't even matter how bad Alcoa's results are. The stock could probably get a lift just on the sell the anticipation, buy the event dynamic that's occurred here. But any way you slice it, what you really need to do is look at this level right here. This is really where your support is, about 845. Percentage-wise, substantially below where the current level is. I would look to buy any kind of pullback. If Alcoa does pull back, look to buy it closer to this last support level. That's your trade on Alcoa. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles, Fitbits. 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You've got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you 1 video a day with a charting idea that's designed to do 2 things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.